Thursday, February 2nd, 2023. What's going on, guys? Brandon here. It's your market outlook for the day, market update. And I think tomorrow maybe I will do end of the day again, but I might start doing morning potentially. We'll see how it goes. See what you guys, if you guys would rather maybe have morning updates, let me know. Maybe end of the day. Just depends. And, sometimes my schedule, what's going on. But let me know what you would like to see. You kind of like end of the day wrap ups, or if you like the morning kind of leading into what's going on. And obviously we had a 25 basis point hike yesterday by the Fed. It's kind of priced in. I think we mentioned yesterday in the market update, I believe it was the market update, one of the videos, that that's what I thought it was going to be. Again, the markets were kind of predicting that, the prediction markets and that effect. So, we didn't. You didn't get it right necessarily, just because you can kind of read the tea leaves. The Fed's been very open of what they've been doing or what they've been thinking. Actually, kind of some of the most open they've been in a long time. And again, I haven't been around more than 10, 15 years doing this, but just from the people I study and the people I watch as well and we'll look at. So, the big thing at the end of the day, this is we want to see what the dog that wags the tail, and it's a bond market, it's a credit market. This until we're blue in the face. This is something that I've learned over the years here, and this is something that really would have helped me 6-7 years ago had I known the bond market and the credit market is really what drives everything. One of my biggest mentors, Robert Kiyosaki, he's been predicting a crash for 20 years, 15, 16, 17 years, really predicated off the pension markets or the pension world and the collapse of that. And the baby boomer was 2016, turning 70 and a half, and starting that, in a large part, he's right, obviously, and that will collapse the markets, and it is collapsing the markets. We just have bailouts of pensions, things like that. However, the credit and debt market is really where the focus should be. He's a real estate guy, and he is around unbelievably smart people. However, he got that wrong, and I was a huge studier of his from, 09 all the way up to 18, 2020. And really just the last couple of years, I've really kind of just gone down last 2 or 3 years down the Bitcoin rabbit hole and studying all different people. I mean, I've got 100 new people that I study that I really just a lot of them I didn't even know 3 years ago. And one of the blessings of COVID, in a way, what's good is bad and what's bad is good, right? From all bad things, there comes great opportunity. And one of the amazing things was that it forced so many people to get online. It forced so many people to create YouTube channels, to create content, to put things out there, like the Ken McElroys of the world, the George Gammons, all the Bitcoiners, turning Preston Pysh going from a macro guy to a Bitcoiner, and just the evolution of people kind of seeing the light, realizing they need to be online and put their content out there and put their thoughts out there, their experience out there. Mike Maloney was one of my first mentors as well in 09, 10, 11 with Robert Kiyosaki, and learning in that space and being a gold bug and being a real estate person. And that's really how I was formed. So I would been through those trenches, been through those battles, and seeing what was happening and thinking, yeah, there's going to be a crash here, and it's going to be gold and things like that. And then over the last 3 or 4 years, really realizing, I got in really to Bitcoin right as that 2017 bubble and Bitcoin happened, December 2017. I got in 2018. So things started crashing. I was viewing it from the outside, and because I had heard about it a couple times, and I'd viewed it from the outside a few times, or I was viewing it from the outside and being like, okay, there is something here. People that were telling me stuff for a year or two before that, just like once every 6 months I'd hear about it. Nothing crazy, but no one ever brought it to me the right way, unfortunately, or else I like to think I would have caught on to it sooner. They just, hey, what do you think about Bitcoin? No one ever said, hey, it's a freedom money or anything like that. I've never presented it to me like that, so unfortunately. But hey, we all have our own story, our own Bitcoin story, how we got to it, and I watched that bubble, and then I watched it collapse, and then that's when I jumped in. As an investor, as a real estate guy, as a business person, I know buy low, sell high. I know studying Warren Buffett, right? We love Warren Buffett and we hate him at the same time. I know buy low, sell high. That's when you make money, right? Especially in real estate as well. All these markets, you make money when you buy. So knowing that, I was buying Bitcoin at 3,000, 5,000, 7,000, 9,000. And then I dollar cost average all the way up, and dollar cost average, and bought really big chunks on the way down and really get back into the teens again. I mean, this was a gift, an absolute gift. So it's been an amazing journey, but the bond market, the credit market is really the thing I've learned over the last 3 or 4 years that I didn't know, 10 years ago, and that really kind of a little bit led me in the wrong direction. I shouldn't say it led me in the wrong direction, but it made me not really understand what was going to happen and what was happening. And then the repo market, 2019, that's really probably the time that I really awoke. The repo market freezing up in 2019, Robert Kiyosaki was one of the first ones I had seen that pointed that out, actually, ironically. And that was the bond market, credit market seizing up, and then they needed to start injecting liquidity. This is what happened in 08, and Robert had called it out then, too. He'd called that out, and he just didn't harp on it enough for me to get it. Or maybe it was just me through my thick skull, but he just... it just, for whatever reason, I just wasn't seeing the light in the way he was talking about it for a long time. And then 2019, end of 2019 is when I was like, oh my gosh, it is the credit markets. Then people like Greg Manarino, George Gammons of the world, all these people now, that's what they harp on. They're focusing the credit market's the biggest market in the world, the bond market worldwide. So that is the big thing, right? I believe it's $400 trillion market, I believe. It's at least a couple hundred trillion, right? It's 100 to 400 trillion. Now I'm thinking of real estate and what real estate is and stuff, but it's hundreds of trillions of dollars. It's the biggest market in the world, way bigger than equities. Equities, I believe, are like 50 trillion total. So I believe it's less than 100 trillion. Then you have I believe Greg Foss says the bond market is $400 trillion globally. So anywho, this is where I want to give a preface of why we look at these things and why we're looking at what's going on here in the bond market first. We always see what's going on. This is why liquidity has been being pushed in the market and why stocks and everything's been bumping. You have these little rallies, these little Santa Claus rallies, delayed Santa Claus rallies. You have tax loss harvesting going on. People maybe sold and they're buying back into positions because they had to wait 30 days. You don't have to with Bitcoin, but in stocks you do. And we've seen the last 2 months, though, bonds have been selling off. And the yields have been going down. So people, excuse me, I said that completely wrong. The yields have been coming down and bonds have been being bought up, right? So there's liquidity being injected into the market. The yield curve, it's telling us there's still dark clouds on the horizon. But in the short term, for the short-term trader, like people like Dr. Jeff Ross, I mean, they're like, hey, I'm bullish right now. I mean, they're buying stocks. And once it starts turning, like say this starts turning back up and getting back up towards here, maybe towards the fours, that's when it's like, okay, maybe we're changing our tune here. Maybe four, a little over four. That's when people are probably going to start changing their tune. You're going to see stocks coming down at that point. So those are things to watch for this year. That's what we have to watch. We've seen this bump, obviously, across the board here in, in the indexes. We've seen this bump, obviously, 1% to 2%, really kind of across the board in all the stock indices. And because of the basis, when you think about this society we live in, where Jerome Powell's up there, where people are like betting on his tone and like what he's going to, I mean, it's just absolutely crazy. And people knew the actual game. That's really the bond market. It's really the central banks, them playing games in the background behind, in the treasury and in the central banks, clipping coins and melting them down and debasing the currency and typing digits into a computer. Everyone would be in Bitcoin. Bitcoin would already be tens of millions of dollars a coin. But as Keynes said, 1 in a million men can detect inflation. I'm paraphrasing, but 1 in a million can detect inflation. And as Henry Ford said, and we talked about that this week too, that it's well enough that people don't know the monetary system, because if they did, there'd be revolution in the morning. So, excuse me. This is the DXY is down, obviously under 102. Again, same thing. The bonds are when these get weak, stocks go up. When the yields go down and the DXY is going down, then you have stocks ripping. It's kind of that risk-on environment. So that's what to watch for at the end of the day. You have crypto, same thing across the board. We really only care about Bitcoin. Bitcoin's obviously pumped. It went over 24,000 today. We haven't seen that in a while. A lot of the guys I see, the 200-week moving average is about 25,000. So things to watch for. Things just keep on the horizon. But again, remember, Bitcoin's a long-term savings tool. It's the greatest monetary network and computer network we've ever seen. So you're capturing that. It's like owning the internet. You're owning a piece of the internet of the future. So before we could only own like Apple or Google or Amazon, things that were built on top of the internet, or Facebook or something like that, layer 2, 3, 4, 5. Now you can own the actual internet itself. That's what Bitcoin is. That's, I'm trying to think here as well, if we can see Bitcoin, if there's a log scale. Want to be able to show, I think logs, excuse me, seeing the log scale is really, really important to be able to see what exactly is going on. And in one of the ways that I honestly came to understand Bitcoin. Anyway, I'll try to find it in a second. So, commodity, same thing. Crude taking a little bit of hit. Oil, that's another thing to watch big time, right? It's crude, oil, and the bond market. Those are huge telltale signs of what's where the market is, what's going on with the market. If the oil is skyrocketing, obviously the prices are, costs are going way up, and it's really constricting the economy at the end of the day. Certain people love it, right? But it's really constricting the economy. Gold and silver took some punches today. And like I said, the DXY, that's down as well. So if people they're leaving the dollar, right? If stocks, they're jumping into risk assets like Bitcoin, they're jumping into risk assets like stocks. And I should say, Bitcoin's not a risk asset. It's probably the least risky asset there is. it's literally code in a computer that you can't get rid of. It's a virus. So people think, though, it's a risk asset right now. And they'll learn over this decade that it's not. But they're jumping into Bitcoin. They're jumping into equities. That's why they're leaving the dollar. That's why you see they're selling out the dollar and getting into other assets. And that's why the dollar is selling off. And you see the right here, the bond market. You see the 10-year, like we said, the 10-year is being bought up. So meaning the value of it is going up and the yields are coming down. So that's where you see these, people selling out that dollar. They're selling out the dollar and they're buying bonds. They're selling out the dollar and buying equities right now. There's sovereigns doing it. There's retail doing it. There's, hedge funds doing it, endowments doing it, whatever, right? Everyone's doing that right now, clearly, because that's what's moving the markets right now. So hopefully that gives you context of what happens in the markets, how like a 30,000 foot view quickly in a couple minutes of how the market truly works. That's how the dog wags the tail, right? You're kind of looking at the DXY. The DXY tells you, are people jumping in, selling off things and going into this dollar, making the dollar stronger, or are people selling this dollar off, price is plummeting now of the dollar, the value of the dollar, the price of the dollar, and they're jumping into these other assets. That's how this works. And the bond market is really a driver of that. So people are buying into bonds, leaving the dollar, so the dollar price is going down, jumping into bonds. The value of the bonds now are going up, which drives the yield down because they're inversed. So this is, hopefully that makes sense. I wish I had my whiteboard. We're going to try to get a whiteboard set up, but I love doing whiteboard videos. And that's how the market works. That's literally, long story short, or long story long, as my wife likes to make me say, that's how this works. So let's see. I'm going to try to get you guys, so we make sure that Bitcoin's working. Is it working? Yes, it is working. Beautiful. Here's the dashboard. If people see there's nothing to Bitcoin, right? It's just nothing. It's digital. Well, again, digital energy is physical energy. Atoms are just atoms, right? Whether it's a cow or whether it's Bitcoin being sent, atoms across the universe here. It's all physical, right? So don't let the words and terms confuse you. Time chain calendar is very cool. I'm going to try to get, like I said, let's see here. I want to try to get the log scale of Bitcoin so you can see all time. This is against the dollar. So now you can see here, this is the dollar getting crushed. This is the dollar against Bitcoin over the last 14 years. So you can see if you've been holding a dollar compared to Bitcoin, you've been getting crushed. But we don't want that. I want to see just the price. I want to see that reversed. I want to be able to see, I want to show this is so important because this is, again, people get worried about like the buying low, selling high, and doing all these things. And again, if this is one of the things I saw initially, 5, 6 years ago, 7 years ago, I would have jumped into it right away because it would have clicked for me right away. There we go. Okay. So here's a log scale. That's linear. So like if you're looking at Bitcoin just priced in dollars, linear, it just looks like, like this is very interesting. Okay, it goes up, bubble, then it crashes. Like, why would I get it? It doesn't, whatever, man. This is the thing. Bitcoin is a network effect. So it's completely different than, just your regular like stock or equity or something like that. So when you put it into log, you realize, oh my gosh, this is very different. So here we go. Now look. So now you can see Bitcoin in log scale and logarithmic scale and the network effects of what it's doing, gaining users, just like anything else, like Apple, Amazon, just the phone, technology, the fax machine, the cell phone, all these different things, right? These technologies over time, they have more and more network effects. So the network becomes more and more valuable as more users are using the network, and it accrues value, more and more value. This is why Bitcoiners are so passionate about Bitcoin, because it's the hardest, best money on earth, and they want more and more people in this network. It becomes more and more valuable over time, right? It's the incentive. Bitcoin, as they say, incentivizes and demonetizes greed. It takes greed and turns it into a good thing because you're trying to get people into the greatest money humans have ever discovered, the greatest network humans have ever discovered, the new Web 5.0. And not to mention, every person that owns a piece of the internet gets to profit from it, right? We get to benefit from that. So there's not affiliate codes and all this fiat garbage going on. It's just, hey, if you come join my network and use the best money in the world, and now we can send remittances back and forth instantaneously, final settlement for fractions of a penny, and we can serve the underbanked and the unbanked across the world, in the desert, in homeless in San Francisco, whoever, and the legacy system can't do that. Now we all get to play together. Now we're on an equal playing field. And this is the network effect that's being built on Bitcoin. So I hope that makes sense. This is one of the most powerful things. I wish I would have seen this, a long time ago. 6, 7, 8 years ago when I first heard about Bitcoin. I wish someone would have told me this or shown me this or talked about the freedom aspect, things like that. But I just was told, hey, what do you think about Bitcoin? Hey, what do you think about Bitcoin? And that was it. And the people that asked me about it really didn't know much about it, so they couldn't go down the road with it. So hopefully that makes sense. And that's the one big thing. Like I said, I'll clip this out into its own video, and that's the network effect of Bitcoin. Look at it in log scale, then it makes sense. Then it makes a much more sense, and you're not just looking at this up and down linear price movement thinking, oh, whatever, like you don't know what you're talking about. It's going to the moon, haha, it's crashing, things like that, right? But when you know this, when you have the secret in your back pocket, everything changes. So I appreciate your time, your energy, your patience, and their time is finite. Bitcoin is time, and time is Bitcoin. The only two finite assets I know of. This is not financial advice, it's freedom advice at the end of the day. Please like and subscribe to the channel. Please let me know what else you would like to see. And stay strong. Please stay strong. Comments of what you would like to see, what you don't like, and we'll bet out in the comments. And I look forward to seeing you on the next one.